So on Friday, Logitech was upgraded by Bank of America, citing stabilization. This is the monthly chart, and you can see price has sold off since a local top hit on February. One could also say that this local top was the formation of a rally, basing candle, and then a drop, making that monthly supply at, we'll say, at the $100 level. So monthly sellers at $100. Now, the upgrade is coming in conjunction as price is on the verge of hitting a monthly buy level. We call that monthly buyers at $65. Now, let's just zoom in really quickly to this formation. So you have this rally in price, extended range green candle, two basing candles, and then the rally out. So let's just squeeze that up a little bit. All right, before we continue with the analysis, let's actually get into the news. So analysts have Bank of America Securities has upgraded their rating on Logitech International stock to neutral, citing improved business fundamentals and a stabilizing market environment in a note dated Friday. Now, the revision follows Logitech's recovery from post-pandemic headwinds that impacted demand for its consumer electronics and peripheral products. While demand has not fully returned to peak pandemic levels, analysts believe the worst of the downturn may be over. The stock's valuation, once seen as stretched amid uncertain demand conditions, is now viewed as more reasonable, supporting the upgrade. Bank of America Securities also pointed to easing inflationary pressures, which previously weighed on consumer electronic spending, as a factor that could improve discretionary purchases. All right. Getting back to the charts again, this is pretend this is the football field. One part of the end zone, another part of the end zone. In the middle is the 50-yard line, and that is where buyers and sellers are equally distributed. Near $100, the sellers are in demand. There's an imbalance between buyers and sellers. And near this $65 level, you have an imbalance between buyers and sellers, in which buyers are in demand. Scrolling down to the weekly chart, you can see this gap down, and that was a result of tariff news Sunday into Monday's trading, and it's just been straight trajectory downward. In addition, or in conjunction with the S&P, which sold off 10% in just 2 trading days. All right, let's take it down to the daily chart. Now you do have this gap. However, there's no volume here. So I would not be keen on expecting a reversal at these levels. And as a result, as you can see, price just gapped down lower. So look at current price go down and to the left. Now I really like this level here. It's at the bottom portion of the monthly zone. We're going to call that daily buyers. And so you have a rally into this level. You have a couple basing candles, and then you have the gap higher on earnings. So you have what we call a rally, basing candles, and then the rally out. Now the question is, will price get down to $62? Yes, if we see another 10%, 8 to 10% sell off in the broader markets, we could see that take price down. So here's the trade setup. And look for price to fill that gap in the second half of the year but potentially you may have some more downside risk before the markets and Logitech reverse. Thanks for watching. Subscribe. Please like the video.